Hello, everyone. This is your market update for November 9th, 2023. We're going to start with some news today. There's some things going on in the mortgage market that are a little concerning. Here's a good video posted by Nobody Special with Melody Wright, and they go over several concerning, I guess I'd call them red flags that could lead to more distress throughout the markets. To touch on a few of them, there was a cyber attack. So Mr. Cooper is one of the largest mortgage servicers in the United States. They have over 4 million customers. And a few days ago, they had a cyber attack. They don't know if people's personal data was stolen, but no one could make payments for several days, and it's unclear what kind of damage was done there. On top of that, another mortgage service company called Meridian Capital is under investigation by Freddie Mac. This is the largest multifamily lender in the United States. They do a lot of the multifamily, and they're done right now. Nobody's working with them, and they're under investigation. So not sure exactly what's going on there, but that could be a cause for concern. Next, we have the DTCC. This is the Depository Trust and Clearing Corp. Basically, they put this out on November 6th, and they're essentially making companies have more collateral. So effective November 20th, 2023, the minimum margin amount will be changed, and they're changing the look back period. So the VAR here is the value at risk. So they're doing stress testing, and they're trying to figure out how much value they have at risk. And more than likely, all these companies are going to have to put up more collateral because the stuff they have on their balance sheets isn't worth as much as it should be. And that could be a huge problem. Again, this takes effect November 20th. They may have to push this back because I think that's going to cause a lot of distress. And over to Chris Whalen's Twitter page. This is probably my favorite banking expert. And he said, Bank of America, if you conduct a fire sale today with their current balance sheet, that would basically wipe out all of the bank's tangible equity. So essentially, he's saying they're insolvent when you measure their collateral at today's prices. That's kind of concerning. And then lastly, WeWork. So I'm not sure if you're familiar with WeWork, but they went bankrupt. They were over a $50 billion company, I believe, at one point. And the big implication here is they have 40 locations in New York City. They just tore up the leases to it, said, sorry, good luck with that. So that's not going to be good for commercial real estate, especially in New York City. Jumping over to the charts, gold. We're back down to the 200-day moving average, and I'd like to see prices find support here. Overall, if you look back to November, we had a big surge higher, then a sharp pullback, and then prices continued higher. I'm assuming that this is what's playing out similarly. So we had a big rise and a pullback. I would like to see prices hold the 200-day moving average, but they may not. They may come back to test the trend line. We're just going to have to take this one day at a time, and I'll look for a swing low like we had here to mark the bottom. Over in silver, again, I believe we had the seasonal low. Last year's seasonal low came in the opening days of September, and this year's lows came in the opening day of October. So if we look at what happened last year, we had a big move up, and then prices pulled back sharply. Actually, there's a gap here. I put a line in for the gap. They closed the gap, surged higher again, came back, closed below the gap, only to reverse higher. So we have a gap here as well this year. Prices ran up. I think we're probably going to come back. I don't know if we're going to come all the way back to fill this gap, but it's a possibility. And that gap is around $21.70, we'll call it 70 cents. So we'll see. I'd like to see this level hold and, start the next up leg from there. I'm not sure how long this is going to take. It could be over soon. It could take 2 more weeks. Over to platinum. Platinum, have not been very impressed with the price action in platinum. We continue to make lower highs. that's a lower high, that's a lower high. We couldn't even take out this high. And we also make lower lows. So I'm not sure if this low is going to hold. My guess is it probably won't. And we could come down to the 850 level. Long term, I think platinum is a ridiculously silly deal right now. I mean, it's less than half the price of gold. There's very little supply. I mean, if you go to a online coin shop, I mean, you're lucky to find any, available physical metal. So I think it's a crazy deal, but that doesn't mean it can't go down a little bit further. And then I wanted to touch on the 30-year treasury to end. So this is a massive decline. What's interesting is Bill Ackman. I'm not a huge fan of him, but he seems to know what he's doing in the markets. And he guessed it could get up to about 5.5% a few months ago. But in early October, he covered his positions, his shorts, and got out, saying that the economy was rolling over faster than it appeared. And I agree with him. I get the sense overall that the economy is maybe going into recession right now. I think we could be. It doesn't look like it according to the markets, but that's kind of the sense I'm getting when you take a peek under the hood. So we'll just have to see how the next several weeks go. But I still think a recession's coming, and I think it might get here sooner than people think. All right, that's it. Sorry this took so long. Hope everybody's doing great. Have a wonderful day.